Hey guys, what's up and welcome to a new Tesla update video. So as usual, today we're going to go over the market, talk about essentially what happened, what we can expect, all that good stuff. Again, don't forget, just in case you forget your dates, today is a Tuesday, even though it's the first day of the week for the American markets at least. So again, it's a shorter week, right? So we only have 3 days left in this week of the market essentially, so keep that in mind. But nonetheless, Tesla ending the day with a beautiful run of 9.33%, which makes us, or pretty much ends us at just shy of $711 for the day, which is a $60 increase, which is fantastic. At some point during the highest point over here, we were up about 12, almost 13%, something like that. Oh, I think it was close to 13%, which is phenomenal. And this is, hey, the people that were calling me delusional, saying how Tesla's going to run, I kept saying, I said Tesla's going to run. I have a feeling Tesla's going to run. And what do you have? A 10% day, if I do say so myself. That's not bad at all. So I'll talk about a quick trade and position update, I guess, kind of as to what I've done today. And other than that, let's just jump right into it. If you enjoyed, don't forget to hit that like button. But let's just get this party started. So first and foremost, let's just take a quick peek at the daily chart so you can see. Not bad. We did, at least, for now, I mean, seemingly break out of this downtrend. Now, these three yellow lines are essentially all the three possible downtrend, like, areas, if you will, or downtrends that, we were currently sitting in, to which all three we have broken, very, very much so, especially these two, right? And the third one being the most important, obviously the hardest one to break, and we did close above it. Now, unfortunately, we did find some selling pressure in the last, like, half an hour of the day. It is to be expected, of course, but all in all, it's still, a fairly decent green candle. This wick is a little bit not as pretty as I'd want to see, in all honesty, but nonetheless, it's still pretty decent. But most importantly, we are above all three of these lines, which is quite phenomenal. And as long as we maintain above them, I'm quite happy. So again, as usual, we want to take a look at the 21 EMA. So you can see this is where it gets a little interesting. We closed essentially right at the 21 EMA, technically above it. I mean, the 21 EMA is sitting at 710.27. We closed at 710.93. Not convincingly above it, obviously, but nonetheless above it. So we'll see what happens with that. Again, this is why I have my 3-day rule. I want to see a consistent closure above this. Essentially, I want to see follow through and I want to see strength above this, which is great. The RSI is looking fantastic. A nice little spike over here, looking like it wants to go straight up. It's pretty much at the same level that it was up here when we were all the way at 775. It's very, very close to it. It's like just a tad under, like literally 1 point under, even though we're sitting at well below that level. I mean, we're sitting at literally about 8% lower than this level where we were sitting at on the RSI at 49. So all in all, the RSI is still looking fairly bullish, still looks like it wants to run, still looks like there's more room to run, and I do believe there is more room to run. So again, I want to stay above the 21 EMA. That's number one. That's very, very important. The 5-day moving average, we're well above that, which is fantastic. It only has 672. So again, we have broke it before and just collapsed back under, but essentially as long as we're above that for the next, essentially for this week, I think we're good. I'm not too worried about that one at all. And the most important, in my opinion, or one of the most important things, is the Bollinger Band. Now, the white line, very similar to the 10-day moving average. It's slightly different, but it's close enough to where I'm not going to show you the 10-day moving average anymore. We'll just use this white line as kind of the 10, even though I think someone told me it's a 20-day moving average. But nonetheless, we're going to use this one as our main kind of, that general outlook, I guess. Because just in case, and just to kind of prove a point, I guess I'll show you guys the 10-day moving average. It usually lines up fairly well with this, Okay, in this case, it's actually a little bit lower, but actually, it's not as close as I thought. Never mind, I take that back entirely. Okay, well, in that case, let's take a look at both of them. I thought it was closer. Other times you've looked at it, it was so much closer than that. But nonetheless, the 10-day moving average is now currently sitting at 668. Again, staying above that is important. But to me, I personally value the Bollinger Band more in the sense where I want to essentially stay above the white line now. Now, granted, how I always say, regardless of whether we touch the red or the green line, at some point, after, a few days of hovering one of these outer lines, we get magnetized back to the center line, the white line in this case, right? And that happens all the time, right? It happens every single time. And in this case, we, once again, got magnetized back to it. This time we're closing above it once again, which is great, similar to what we did over here. Now, what I want to see is, again, similar to the 21 EMA, I want to see strength. I don't want to see a collapse underneath, which, in other words, the easiest way to think about that is essentially, I don't want to break 700. That's the easiest way to think about it. I want to see 700 hold, and I don't want to fall below 700. And if we do, I want it to be recaptured fairly quickly with some convincing strength. That's pretty much like the easiest way of thinking about it and the easiest way of understanding what I personally am looking for and what I personally want to see. Don't want to see 700 breaks. So With that being said, though, I wouldn't be surprised if we touch 700. Like, I wouldn't be surprised if maybe tomorrow even we come down to 700. That's only a 10-point move down from here, which isn't a lot. It's like probably 1.5% or so from roughly where we closed today. Yeah, 1 point, pretty much 1.5% actually, exactly. Which is, you know, not it won't be surprising. I think that'll be, you know, reasonable. But again, I'd want to see some defense, you know, shown over there. I don't want to fall too far under this white line, if at all. Pretty much the most acceptable level I would be okay with falling is, again, back to that 680 level once again. 700 I wouldn't want to break, but kind of what I was talking about before when we were like over here, I think, or something. 700 I don't want to break, but I especially don't want to break 680. So we'll see what happens with that, of course, but if we can just maintain that 700, that to me is the ideal scenario for definitely having, you know, kind of more room to the upside. But 680 will still be valid in my honest opinion as well. But I'd want to see the 680 get bounced off fairly quickly. Like, I wouldn't want to stay down here for more than like a day or two. Let's just say that. I'd want to see a bounce off of here like fairly quickly. So that's kind of the idea behind all of that, which is, I think, going to happen. I'm still fairly, you know, I don't think this run is done. Let's just say that's because ultimately, I'm sure some of you remember sometime last week, maybe it was Tuesday, maybe Wednesday, I can't remember exactly. I was talking about how I personally foresee a potential bear flag forming, and that's exactly what we, in my opinion, are forming at the moment. Still, we are currently sitting on the 1, 2, 3, going up potentially to the 4th touch point of the bear flag that we are potentially setting up over here, which would put us pretty much close to about roughly 800-ish, which is my current price target for Tesla. So we'll see what happens with that, but that is my current price target. Somewhere around that general 800 level is what I personally think will potentially run up to. At the very least, I think we'll go up to maybe like 760 to 770. I think that at the very least will happen, but potentially even all the way up to 800 is definitely not, in my opinion, out of the equation whatsoever to form this bear flag. Now, moving on to the slightly smaller time frame here, we're going to take a look at the 1 hour here. So you can see beautiful run up. Massive gap, of course, but nonetheless a beautiful run up. We still have a gap all the way sitting up here at 775 roughly. Keep that in mind, guys. We never filled this one all the way up here, so that's something else to keep in mind. And the easiest way to determine if we're going to fill this gap is essentially if we break 765. If we break 765, we're pretty much going to run straight to 775 and fill that gap. That's the easiest way of thinking about that. If you want to make like a quick, you know, scalp play or something like that, a quick trade, that's one potential option. Not financial advice. But nonetheless, the RSI is just beautifully setting up higher highs and higher lows still. You know, we came all the way down here, went here, set a higher low, set a higher high. Now we're probably going to, as we come down to maybe 700, maybe even 680 to maybe retest a breakout potentially. Most likely going to set a beautiful higher low as well. And then we're probably going to have one final rally all the way up to that price target I talked about, being that rough kind of, you know, 800-ish level, give or take, which is not going to be surprising. So pretty much what I foresee happening is something similar to how we had over here, where we kind of ran up and then we kind of had some consolidation, set up a little bit of a bull flag and then ran up again, or something similar to how we ran up all the way here, set up essentially a bull flag right here, followed by that leg up. I expect something similar to play out over here, with that leg up coming over to, again, you know, like 780, 800, somewhere in that range potentially is what I'm currently projecting and what I think is going to be happening. But all in all, yeah, I'm feeling good. You know, back when everyone over here was screaming, you know, stupid stuff, talking about how we're just going to plummet, Tesla 500 next week, blah, blah, blah. Again, when you see, you know, idiotic comments like that, you know, again, not always, but it's good to be the contrarian. You know, again, when we were all the way down here plummeting, I talked about the double bottom. I talked about how I'm feeling bullish. That's exactly what I wanted to see. How the bounce off of it was pretty, you know, pretty juicy, 3%. It was a nice, solid, you know, fairly bullish looking bounce. And yeah, this is exactly what happens, right, when you can predict these kind of moves, you know, which is great. So I want to do a very quick update on what I have done in terms of a trade, I guess, if you will, or like, you know, my overall actions, or, you know, positions, whatever you want to call it. So personally, I have currently sold everything. Now, you might be wondering, why the hell would you sell everything if you're so confident we'll go up to this? Well, I still have bullish positions, right? I sold everything. I have literally 0 shares at the very moment. However, with that being said, I did use that cash and I did sell puts for July 1st. I sold puts 710, and I still have, and I left a bit of reserve cash to sell another put in case we do come down to 700, maybe even 680 to sell another one. You know, it's kind of like same concept as when you buy the dip. You don't want to just buy everything right away. You want to have some cash in case it keeps dipping. Same concept here. In case we keep falling down, I'll be able to sell another put, so I won't feel as bad about the drop essentially, and, you know, make a bit extra money hopefully. But that's essentially what I'm doing. So even though I sold the cash, I ended up sold the shares, sorry, into full cash. I ended up selling those puts, which is a bullish position, essentially saying that I don't think we're going to drop too far low. And ultimately, I think we're going to have a run up still, where I will ultimately buy back those puts that I sold for, you know, half the price or something like that, give or take, whatever, you know, it ends up being once we get up to this general level, which is my current price target. And the reason I did that is because it's essentially, it's a similar position to whether or not I just held the shares. The idea is similar. The issue is the fact that, not the issue, but the reason I did it is because it's a less risky way to do it, in my opinion. Because worst case scenario, what would happen is, because technically I did sell the shares at a loss, but the cash I get from selling the puts pretty much makes up that difference. And on top of that, if worst case scenario happens and we somehow just plummet straight through here, I'll be buying the shares at essentially 710 plus the premium that I purchased, which was about 30. So subtract 30, and my average on that goes from 710 all the way down to 680, where essentially under 680 is where I start, you know, pretty much losing profit, if you will. But, you know, it pretty much gives me a larger buffer. It's less risky. But obviously, technically, I'll make it less if it does actually skyrocket to 800. So that I will make less, but it's also less risky. So, and I'm willing to do that right now, especially in a market like this, where I always tell you guys as well, it's very important, not financial advice, you know, make your own decisions, but to take on less risk, in my opinion, and not to be greedy. Very, very important, because you can get wiped out extremely easily. So that's kind of what I'm doing, and that's why I did that position. Essentially, just taking on less risk while still, you know, being fairly confident that we are going to probably move up to somewhere in this kind of range all the way up here. So that's my current update on my positions, guys. But yeah, we'll see what happens with that. If this bear flag does play out, like I said, we're probably going to be dropping to 450. So keep that in mind as well. That is something to, you know, keep in mind, of course. Very, very important. But nonetheless, guys, that's it for this video. Let me know what you guys think. But until then, thank you all so much for watching, and I'll see you tomorrow. Peace.